Joining us from Sunnyvale, California with more, Yahoo Finance editor-in-chief Andy Serwer. You've got your eye on tech companies also being out there, and you're talking to some CEOs, Andy, about how they're kind of grappling with this new attention from Washington.
Yeah, and this is another salvo coming from Washington, D.C., Julie, the President of the United States saying that, maybe fines are the answer. And, heretofore, the big tech companies have avoided fines, except in the case of Facebook, which is looking at a fine of up to $5 billion from the FTC. But fining has been the purview of the EU, and they've gone after the likes of Google and other big companies. But clearly, Washington has its sights set on big tech. You heard about the FTC and DOJ looking into investigations, and Congress is certainly going to be moving forward. So there's increased trepidation out here.
Andy, we talk about, regulation and the effect it could have breaking things apart. But when you look at the big banks and what happened after the recession, the big banks got even bigger. They didn't get broken apart. So does Silicon Valley learn the wrong lesson?
I think that's a great point, Adam. I mean, government investigations, first of all, take years. They're usually addressing, the problems of the last war. And oftentimes, the opposite result happens in terms of the intention when they seek to regulate or remedy. And, when it comes to the big banks after the Great Recession in 2008, 2009, yes, there was Dodd-Frank. But, the banks did just fine. They also got bigger because there was a lot of consolidation. So it's very unclear that, when the government or if the government goes after these big companies that A, they will get smaller, or B, they will get less powerful. I think there is an overhang over the stocks and over these companies because it's a huge unknown. But, where it goes is really anyone's question. And you have to wonder, in terms of the conversations between the general counsels and the CEOs and the boards of these companies, very interesting times.
So, Andy, as you talk to people out there, I mean, these CEOs, it may be a big unknown, but they have to, it's their job to try and prepare for these things. So what are they doing to try to prepare, or are they not preparing? Are they sort of gaming it out and saying this is not going to happen?
Well, I think that Washington has their attention, Julie. I mean, no question about that. So, yeah, I know that these executives are meeting, with their C-suite counterparts. I know they're meeting with boards and talking to them about this. There's some interesting theories. And of course, they're also building up their lobbying efforts in Washington, D.C. Some are further ahead than others. Google's further ahead than Facebook. They've got to catch up. But another interesting point is I've heard that people are saying, the new structure of Google with Alphabet and even what's going on at Facebook with some restructuring there actually is pointed towards a time when these companies might be broken up. I mean, if you think about it, Alphabet is probably or potentially structured in a way that would make it a lot easier for that to happen. Now, it could happen by the company's own volition, which is probably what they would prefer. So, those conversations are ongoing as well, which is really interesting to me.
Andy, would investors benefit if, let's say, an Alphabet is broken up? They can focus on the key search business and then divest that Waymo money-losing business.
Yeah, and then you've got YouTube, which is a juggernaut also, Brian. And, I think this is the really interesting question from the investor standpoint, which is, would these companies be better off if they were broken up, particularly, say, Google and Facebook, but also potentially Amazon with AWS. And I'd like to see a lot more research done on Wall Street in terms of, is this company better broken up in terms of the valuation than kept together? There really has been a paucity of work done there. And I think, because potentially it could be something that is beneficial to shareholders, that Wall Street should actually start looking into it. And of course, the investment bankers would love this, right? I mean, they'd love to get in and, collect some fees.
All right, Andy Serwer joining us from out in Sunnyvale. Thank you so much, Andy. Appreciate it.